Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello members. A little bit of bonus content for you guys today. First of all, if you're a level 3 member, I know a lot of you work 9 to 5 jobs. If you snuck off to the bathroom to check out this video, then understand this. It is not a trade setups video. It's not time sensitive. So you've got plenty of time. If you're pushed for time at the moment, then you can come back and watch this at your own leisure. For everyone else, I'm going to make this available today as a bit of bonus content and let's call it early release for all members. And then I think I'll post it to the main channel on Sunday for everyone else to watch. First of all, I want to pay credit where credit is due. Yummy Flowers brought this to my attention this morning, so thank you for that. It was indeed very, very interesting. First of all, if you want to check this video out, it's by Tiger Financial News Network, and here is the title for you guys. So I was clicking through this video earlier on, I was watching this, and I was thinking, what on earth is so fascinating about this, right? My first thought was the 80s called, and it wants its charting software back. Also, this video is absolutely bombarded with adverts. I've never seen anything like it. And I was just about to say, I can't be bothered to watch any more of this, and then suddenly we got to here, okay? We got to this cycles part, and I thought this was absolutely fascinating, and I'm sure you're going to enjoy this too. So again, paying credit where credit is due. This is Stan Harley. This is his idea. It's his work. I'm just showing you the video. This is the Dow Jones, and the Dow Jones, he shows, undergoes this 41-month cycle. Now, as ever with cycles, there's always a bit of wiggle room, okay? But what you'll notice, roughly speaking, is when we get a peak in the sine wave, this 41-month sine wave, it tends to coincide with tops in the Dow. And similarly, when we get a trough, we tend to get a low in the Dow. So kind of the same deal here, roughly speaking here, although a bit to the right, roughly speaking here. This one was pretty good in the middle. This major low was slightly late, as you can see here. Again, slightly late on the top for here. This low was pretty much in the middle for 2022. And now, as you can see, I'm sure it is telling us to expect a major market top in the Dow in the not too distant future. We're right in that window to see a 41-month cycle top for the Dow Jones. But from here, it only gets more insane, okay? What he's done is attach a Fibonacci-based timing tool to the low all the way back to 1974. Walking forward, okay, every single major top for the Dow was actually picked by a Fibonacci permutation. So this top right here is 1, okay, 1 measured from that major low in 1974. Then the second top forms right around 2, as you can see, 2.618, 3.326. Then the next high is picked by the 3.618. Then we see the 3.764 pick this top here before the 22 bear market. And the next Fibonacci number is expected to pick the next top for the stock market, the next major high in December of this year. Now, here's where it gets even more crazy for me. This data set spans about 50 odd years, right? All the way back to 1974 and has a standard deviation of just less than 1 month. So this tells us to expect a top to form in December of 2024, plus or minus 1 month. To have a standard deviation of less than a month on a 50-year data set is unheard of. The next thing he shows is this Lucas count, okay? Now, here are the Lucas numbers here, and when you multiply them by 2, it gives you an expected date to see the next major high come in. Using this methodology, it projects a high between the 5th and the 12th of November of this year for the S&P 500, which of course would be within that standard deviation error for the Fibonacci sequence. He then goes on to show roughly every 51.6 weeks, we get major lows form, generally speaking, in October for the stock market. And what's really interesting about this is where it starts to overlap with my cycle work. Okay, so 51.6 weeks is roughly just 2 times 26 weeks, which is what I use for the average weekly count on the stock market. So I use 26 weeks on average, blue to blue. This is a weekly chart. And you can see if I do this, we got 22 weeks here, slightly early. And here we got 32 weeks, slightly late. Here we've got 25 weeks, which is bang average. And that tells me to expect perhaps another bang average 26, 24, something like that week cycle low. So I thought that was interesting because this 51.6 week cycle is essentially just 2 26 weekly cycles that I tend to track and show on the channel. If we were to get a 24-week weekly cycle come out of here, that would put us right at the end of September, or perhaps the first week of October. If we were to extend 2 weeks beyond that to give us a perfect 26-week weekly cycle, that would be sometime around the middle of October, which is where this is projected to land. You can see here, the 11th of October. If we have a weekly cycle low around the 11th of October, something like this, okay, then you can see we would go on a daily count here. We are currently going to be on day 26 today. If we made a day 38 or day 40 cycle low, okay, that would put us first week of October. So if the cycle low is going to form sometime in this window, I find it hard to believe we're going to have a very short daily cycle of just around 15 bars. Perhaps what it suggests is this daily cycle will be longer. Perhaps what we're going to get is something like a day 46 cycle low, which will take us into that first or second week of October for the low. But either way, it tells me to be looking for a daily and a weekly cycle low to form somewhere around here. And of course, as I said, based on my cycle analysis, based on the 24 to 26 week on average cycle that we tend to see, this would make a lot of sense. It also lines up nicely with this, which of course is essentially just 2 of those 26 weekly cycles. And he then goes on to show that the S&P 500 also tends to put in these 80 trading day high to high cycles. So each one of these purple bars denotes the 80-day cycle. And you can see, roughly speaking, we get a high form right around every 80 days for the stock market. This projects the next 80-day high on the 8th of November 2024. So a quick recap here before we move into the charts, okay? Number one, we're expecting this 41-month cycle to tell us that the stock market is getting close to a peak. Number two, the Fibonacci timing sequence is telling us to expect a top in December of this year, plus or minus about 1 month. The Lucas count is also telling us to expect a top sometime in November, perhaps around the second week of November. And we should also be looking for a major weekly cycle low to form early October, before lastly that October low resolves to a high sometime, let's say November to December. So to visualize this, let's draw it on the chart, okay? It tells us that we should be open to seeing some kind of low come in into the first or second week of October, perhaps something akin to this, okay? Then it tells us to expect a final hurrah. Now, how high up that goes is anybody's guess. Is that the blow off top angle? Okay, do we end up setting something like this out of the October low? Do the blow off top crew get to be right and then we see that breakdown? Or are we just going to get some kind of lackluster pump up here, something like this, and a rollover, and then when we zoom out, it will have all the familiar symptoms of being a typical distribution top, no blow off top. Now, I will say this, when I look around on Twitter, the blow off top crew, Henrik, David Hunter, they are 100% sure of themselves that a blow off top is coming, okay? And it might come, I should say, out of this CPI print today, okay? We could certainly see something like this, daily and weekly cycle low, one final push, and then get a top sometime around November, December. And overall, that won't be too far from the base case hypothesis. But based on the cycles, okay, the cycles are telling us that we should maybe expect this CPI print to get sold off. We should maybe expect to find a daily and a weekly cycle low in October. And out of there, we know we have got a tradable low, right? We know we've got a low out of this October low, this early October low. And then hopefully we get a blow off top from here, right? Hopefully we get something like this, and Henrik and David Hunter and the blow off top gang are all correct. But more importantly, I think the best thing here, the most prudent outcome, is to be aware that we might actually not get that blow off top. What if instead we get something like this, October low, and a slight or marginal higher high, okay? In here, all of the blow off top crew will be screaming new highs. We just printed new highs. We're going to a mount up. We're going to a blow off top, blah, blah, blah. And if this market starts to top around that November to December timeframe, we will be able to say, well, the Camel Crew expected that. All of this additional cycle analysis also aligns well with that. And therefore, any rollover here, whilst people will be screaming buy the dip, blow off top, I think we'll be able to say, okay, time to start to look for short entries. By the time we get here in that November to December timeframe, I think it will be time to start to look for a short in here, okay, and a second angle violation. Because I think if we were to break down from here, again, it will be very obvious, and that will make a lot of sense from a cycle perspective. So to be clear, we could absolutely have a situation like this where we do scream out a CPI, we get a daily and weekly cycle that's quite shallow, and then we blast off to all-time highs, happy days, blow off top gang, get to declare victory on this, okay? That's entirely possible. It's also entirely possible that we've got to come down first into that first and second week of October to find a weekly cycle low, and then we can look for third and final angles, okay? That's another scenario that we got to be aware of. And last but not least, but I do think we should certainly be paying attention to it, is what if we get a sell-off, a weekly cycle low, and some kind of lackluster bounce, something like this, okay? Then, like I said, in here, everyone will be screaming blow off top, everyone will be screaming we've just printed a new all-time high, and I think that will make a very, very nice opportunity to exit the market and for me to look for shorts. And then again, based on all of this long-term cycle analysis, we'll have the 41-month cycle telling us, yep, that makes perfect sense. We'll have the Fibonacci-based timing sequence telling us, yep, a top sometime around December plus or minus a month made perfect sense. We'll have the Lucas count also telling us, yep, a top for the S&P in November made perfect sense. And we'll have the weekly cycle lows adding a layer of complexity here as they tell us to be open to seeing a weekly cycle low form first and then that final push to the ultimate high. And again, based on the 80-day trading cycle highs, okay, that would also tell us again to be looking for an ultimate high to come in around November. So I know if you're new to trading, a lot of people will be tempted to say, well, you're just saying it could go up, it could go down, and you don't really have a clue. Okay, but if you really think about this, the information that we have now, all of this cycle stuff that I've just presented to you, gives us a huge advantage over the market, okay? If you can put your ego aside, abandon the need to be right or wrong and say, I told you so, and just ask ourselves, what do we have here that gives us an advantage over the market? And the answer is we have a few very key pieces of alpha, of advantage, of information that most market participants won't have access to. Okay, so that is massively advantageous here. And those pieces of information are, number one, if we come screaming out of here, happy days, okay, but we know we got a daily cycle low and perhaps a weekly cycle low to focus on. If, however, we sell off here, then we know, like I said, we haven't got loads of exposure, okay, we've been easing our way into this. I might have to cut my Dow Jones long and wait for this low to show up. But if we get that sell-off into October, we know that is a buyable low. We absolutely know that October low is a tradable weekly cycle low. And from that tradable weekly cycle low, again, we also know that there's only really two paths from here based on the cycles. The cycles say either we scream higher, okay, and then we look to sell sometime November, December, or if we start to do something like this, okay, and round and make a marginally higher high, again, we'll be able to say, well, it doesn't matter what everyone on Twitter thinks. It doesn't matter how many people are screaming blow off top. It doesn't matter that some people have targets of 7,000 or 8,000 for the S&P. If we start to roll over here, we also know that we've got an actionable short setup and sell signal and exit the long-term account position signal on a trendline breakdown here, which means we could be looking for shorts, something akin to this, okay? And again, we will be able to get out as close to the top as physically possible in trading, right? So either way, I think this is a very, very, very exciting time for the Camel Crew because, like I said, we know if we scream higher from here, happy days, buy the dip, look for a rip into November and December. We know if we react negatively to CPI, then being defensive, being cautious, not going to full exposure here was warranted. It was the right call. And more importantly, we've got an actionable and tradable cycle low out of October. And then from that tradable long, okay, only really two things can occur. Either the blow off top crew are right, happy days, we get a nice bit of profit, and then we flip short on a trend line breakdown and a third angle violation, or we don't get a big blow off top, we get this round, okay, and the Camel Crew is in here going, whoa, 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 everyone's wrong calling for new highs, everyone's wrong calling for blow off tops, this is a distributive type pattern, and look how close to the top that short setup is, okay, so I think this is really, 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 really good. I think this is a lot of alpha. I think this is a lot of advantage. And all we have to do here is put our emotions aside, put our biases aside, put the need to say, I told you so, you're right, you're wrong, you were calling for this. None of that matters. Okay, what matters is, can you make money in these markets? Can we trade, number one, the next cycle low, whether it's up here or whether it's down here? And number two, can we then use the longer term cycles to let us know when to exit, whether it is here or much higher up? Okay, so I think this is fantastic. I'm very, very excited. So I hope you enjoyed that. I hope you found value here today. And until next time, take care from me. All the best. Cheers. Bye.